Assalamu alaikum to everyone. So it seems I'm the only one here coming from financial sector. So I don't have opportunity to say, some other speakers told this before me, but I will try to be quick and considerate. So as most of you know, there is a bank that strives to operate according to Islamic finance principles. We say is the only Islamic bank in this part of Europe. The next one is in Albania, that also is, let's say, trying to operate. Why I say this? Because we have a regulatory environment which is very difficult for Islamic financial institutions to implement all these contracts and principles that Islamic finance requires from these kind of institutions. So especially in Bosnia and maybe Albania, but our case is Bosnia, we also have this socialist legacy combined with European legislation, regulation simply copy-pasted from European Union, which is very good in the EU, but doesn't have to be good for us and doesn't have to be good for Islamic financial institutions. So when we talk about Islamic banks, Islamic financial institutions, we have to mention that they are governed by Islamic principles, by Sharia law. There has to be Sharia board ruling the bank, and what we probably all of us know, it prohibits interest, excessive uncertainty, too high risk, speculation, and in general investing in haram activities. So, in order to implement these principles, it emphasizes profit sharing and contracts such as musharaka, mudaraba, murabaha, ijara, and others. It emphasizes risk sharing, some other models that are not, let's say, not so easily accepted under traditional conventional banking environment. So I will try to skip this transparency, let's say, this part of talk, because it's quite known for all of us. And actually, sometimes, from time to time, we like to say in Islamic, in halal, this is very special. But actually, when we look at the contemporary industry on the West, it is very much the same, because they didn't follow maybe some sacred sources, but with science, with reason, they came to the same conclusions, and sometimes they perform even better than the Muslim world in some practices. So, objective of the article is to investigate challenges faced by Islamic banks that try to implement these Islamic banking contracts in Bosnia and Herzegovina. So this means regulatory, legal, and operational barriers that exist in Bosnia. And these challenges include restrictive legal frameworks, inability to implement the contracts such as murabaha, musharaka, and others, and also to discuss potential solutions and future prospects of Islamic banking in Bosnia. So when we say explore legal reforms, I wouldn't say reform. It's just a small, maybe incremental change in the legal framework to let these institutions operate according to their principles. So what is the most well known about Islamic finance? It is prohibition of interest. In order to avoid interest, we have these risk sharing and profit sharing activities, which is not so easily accepted under the conventional framework. And we have asset-backed financing, which is murabaha and ijara. Unfortunately, in the practice of Islamic banks, murabaha is the most widely accepted. Why? Because it is the model that is very similar to conventional models. So with murabaha, actually in most cases, mathematics is the same, almost, and the risk is the same. It's just, you know, it is for the clients who want to be sure that their financing is according to Islamic principles, but it doesn't bring all the benefits of Islamic finance for the client and for the society. It is just to provide halal alternative. I'm telling this because some of you before mentioned some benefits of halal. When you eat halal, it means maybe you will avoid some diseases. In some models it is so in Islamic finance, with some others it's not. So it depends on which model you use. So you have this interest versus profit sharing when we talk about the differences between Islamic and conventional system. We have ethical investments, but we also have ethical investments in conventional. Maybe even better structured and developed with all these CSR, impact investing initiatives, SDGs, and so on. We had asset-backed transactions, but also I have to say that there are mortgages in conventional banking sector as well. So conventional financial institutions will also, they would prefer to have some kind of collateral, which means they also prefer asset-backed transactions. And transparency and fairness emphasized in Islamic banking theory, but also Western conventional banking also recognized importance of this transparency, fairness, other principles. So you can find this also as well under conventional laws. So the most important one is the interest. So this is the key principle that Islamic banks must avoid, while other principles are really relatively similar. So when we talk about the current legal and regulatory framework, the key legislation is the law on banks. It's very good legislation. As I said, very much copy-pasted from the European Union, which is good. We strive to join the European Union. The law mandates capital adequacy, risk management, corporate governance standards, which is also all the good stuff from Europe we imported. But also the current law does not explicitly accommodate Islamic banking, Islamic financial contracts. It doesn't mention, it doesn't forbid. But it says, for example, that Islamic bank, that bank is an institution that accepts deposits and pays interest and approves loans and charges interest. Of course, the second interest will be higher than the first one, and this is the basic business model of any conventional bank. So when you have such things in the law, it is very difficult to be Islamic bank, you know. Also, there are some challenges such as difficulties in implementing profit-sharing contracts because of these clauses in the law. Also, you have disclosure requirements. For example, when we had maybe some 10 years ago, we had issues with the Swiss francs, and some people had to repay much higher amount of financing than what they should repay at first, because there were issues with the currency risk with the Swiss franc, and then the government imposed this law on the consumer protection, so which is good. It requires the bank to disclose amount of every KM, every single KM, the local currency, that the customer is, that must repay to the bank. So if you want to implement this profit-sharing contract, you cannot, because profit sharing means you will have to wait a year or 2 or 3 to see the actual result of some project, or financial result of a company, and then you see if the profit is, I don't know, 100,000 km, and you share, there is a ratio you agreed on advance, and the bank will get, for example, 30,000, and the rest goes to client. This is the real musharaka. However, you cannot have this with the current legislation, which is an interesting example because the law itself aims to prevent, harm for the client, but at the same time prevents Islamic or Muslim clients to have Islamic financing according to their requirements. So we have these regulatory challenges, restrictions on profit-sharing contracts, limitation on trade-based financing models. The bank cannot trade, as the law says, the bank accepts deposits and it trades money. It cannot trade a car or apartment or something else. And there are these requirements for clear disclosure of charges and returns, and it's the same with deposits as well. So, difficulties in applying Islamic contracts, inadequate knowledge and expertise among bank employees is the next to be Islamic. And sometimes it is really not possible because the product itself is not Islamic. So, and at the end, there is this legal and regulatory challenge from the banking law. So, among solutions, we have regulatory reforms, or let's say not a reform, small incremental change, capacity building, which should include universities and other similar stakeholders, and innovative financial products. However, Islamic finance is relatively innovative compared to other sectors of Islamic economic system. There is market potential for Islamic finance because there is more than 50% of Muslims, but these issues must be solved because there is some skepticism as well among these potential clients. So I think I mentioned the first three. We should also implement some public awareness campaigns, and also I have a call for collaboration and partnership with all stakeholders, which is part of this conclusion. Call to action for all stakeholders, Islamic community, Islamic bank, regulator, the Federal Banking Agency, the central bank, the universities should work together in order to propose solutions, which we all know we tried several times regarding the regulatory environment, but the law simply didn't pass from political reasons. But there are these another issues that can be solved without the politics. So we should work on solving what can be solved now, and maybe leave the political aspect later when time comes, for this. So thank you very much.